Good morning, everyone. It's 9:16 on the East Coast, 7:16 here in beautiful Chandler, Arizona. My name is Tim. I'm your trader today. Welcome to our inaugural webcast. As much as we try to avoid making mistakes, I'm sure that today will be a little bumpy, so just bear with me as I kind of get used to everything here using this live webcasting for the first time. So let's go ahead and talk about what's shaping up this morning. This morning at 8:30 Eastern Time, some economic data came out. Uh, Jobless claims, unit labor cost, non-farm productivity, and initial jobless claims. And although the picture is kind of a mixed bag, I don't think the market is taking it very well. Jobless claims were up slightly, 1.953 versus 1.928 was the consensus going into it. Unit labor costs are up, something that would be bullish for the dollar. May not necessarily be bullish for the market. I know that the Fed has been waiting to see some evidence of wage inflation, and that might tell you that it's rearing its head. If you combine that with the fact that non-farm productivity is down, the consensus was up 1%. It was actually down 10 basis points, so not down by much, but off 1.1% if you think about it from that standpoint. Jobless claims were better than expected. The consensus was 238,000. The number came in at 230. So on balance, at least the stock indices are not taking this very well. If you take a look at what the S&P futures did, they were already on a decline. You can see here this decline started at about 8:12 or so Eastern time. Started to go down, a little bit of a recovery. Then the numbers came out that we just talked about at just about 8:30 Eastern time, and it's been kind of a slow, well, I shouldn't say slow, downward slide ever since. It's in recovery mode right now. So that's where we are from the standpoint of the futures. What was news yesterday? Well, yesterday was Fed Day. Fed came out and didn't surprise anybody. They came out and said they were going to stand pat on rates, which is about what everybody expected. So in a situation like that where there's no policy change announced, at least not from the standpoint of rates, everybody takes a look at what the Fed statement is and begins to parse the language for clues about what the Fed's going to do in the future. They added some language to it. The word further was added several times, basically indicating that the Fed expects, further heat or momentum in the economy, basically indicating that they're positioned to change from a policy perspective, increase rates by 0.25%, continue to unwind their balance sheet, which would both have effects on tightening the economy. That was bullish for the dollar. It was bearish for gold and other counter currencies if you take a look at those futures. So if we take a look at gold futures yesterday, Fed announcement came out at 11:30, I believe it was. So if we take a look at Wednesday around that time, around 11:30, if I can look at the right date, it might be helpful. So this bar, actually it was at noon. This bar right here, noon, pretty broad range. I was watching that yesterday. Initially, gold tumbled, then it recovered, then it tumbled. And we can see that now, from that point, when the announcement came out, it's basically flat, which is interesting. It's done all this moving here, to come back to being flat. So what does that tell you? I think that there's probably still a bit of uncertainty. If you take a look at what is affecting gold prices, gold has a safe haven status, but it's also because these gold futures it's a dollar denominated asset. Whatever impacts the dollar is going to impact gold in the opposite direction. So whatever's going to be bullish for the dollar is going to be bearish for gold. By the same token, if we look at any kind of countercurrency like the euro futures, for example, we'll see the same thing. Around noon yesterday, hone in on this. Around noon yesterday, when the announcement came out, I wasn't watching euros at the time, but I would bet you it did the same thing. Initially, it plunged, then it recovered, then it plunged again, which what that tells me is that's a function of what the dollar was doing. If you go to a shorter time frame, and we take a look at it, this is around noontime. We'll see the same thing. In that bar, there was a period there where it was up. So if we want to put even a finer point on it, let's take a look at the 1 minute time frame. Oops. At noon. So basically it was all over the place. In addition to that, yesterday afternoon, there were some earnings announcements. Facebook and Microsoft are two of the biggies that came out. I was actually watching them yesterday. And starting with Facebook, initially the reaction on Facebook when the news came out wasn't positive. It was actually negative. The reason for that was that even though they beat from both the top and bottom line perspective, and pretty handily actually, I mean the estimate was for just shy of $2 a share. They announced $2.21 a share. The concern was with regard to daily average users and user engagement, because if you've been paying attention to the news, the concern was fake news, the impact of Russian meddling in the election, and were some of those, were those actors utilizing Facebook to do it? And Facebook came out and said, well, we're going to do the right thing. We're going to implement these, whatever you want to call them, algorithms to prevent that from happening, acknowledging right up front that it's going to have a negative impact on user engagement. On balance, though, I think on the call that the management team at Facebook were able to turn things around. They're saying, look, us doing this is going to be a temporary blip on the radar. Long term, though, there's still a huge demand for advertising on our platform. So this is going to be a temporary blip. The state of this company is strong, and we will continue to grow. And investors, I think, were cheered by that sentiment. As we can see, the recovery in Facebook, trading up as high as 194.68 in the after hours. It closed at 187. That's a $7 jump. And now it's trading around 189.12, so about a $2 and change improvement over yesterday. Microsoft, on the other hand, closed the day at 95 even, and that's exactly where it is right now. So kind of like gold, it spent a lot of time trading up and down in the pre-market, or in the post-market and the pre-market. Now it's up. I don't know if that's on news. We can take a look here at what the news items are for Microsoft. if there's anything that we think is behind this. I don't really see anything. I mean, Stifel Nicholas has maintained Microsoft as a buy. You know, that could have something to do with it. They also raised the target from 105 to 92, so I'll bet you that that had a big impact on it. In fact, that's the only news that we really see here. Well, I shouldn't say that. 6:30, around 6:30 my time, which is 8:30 on the East Coast. RBC Capital raised the price target from 100 to 105. KeyBank raised it from 106 to 110. So not exactly analysts falling all over themselves to raise price targets, but they are raising price targets, which is having a boost on the stock this morning. Now, if you take a look at what the major indices are anticipated to do, judging by the futures, the Dow futures are down 181, so about 0.75%, almost 2/3%. NASDAQ is down about the same percentage. The S&P futures are down 40 basis points. The Russell 2000 futures are down almost 0.5%. Volatility is up 2%. So one of the things that if you've been trading for a while, you've been paying attention, you know that volatility and the price of the major indices are usually inversely related. The definition of volatility is volatility as measured by the 30-day futures on the S&P. So that's where that comes from. Dollar index is down 12 basis points. Not a whole lot. Gold, as we said, is basically flat. Crude's up almost 1%. 10-year note, our futures on the 10-year note anyway, are down 0.03 basis points. So, 3 basis points. That's basically flat. Overnight, the Nikkei was up 388. So, if we take a look at what the major indices were doing yesterday, that was probably Japan was probably a follow-up to that. It was looking like, if you follow the old rule of if you're a chartist and you look at candles, right? The candle 2 days ago, hit a high of 95.45, but then closed down slightly on the day. The next day was kind of a bloodbath. I'm sorry. Sometimes these charts take a while to update, and when you're on autopilot like I was, you read the wrong number. So 3 days ago, on the 25th, which is last Friday, the S&P peaked at 2873, was down the next day, was down again on Monday, down again on Tuesday. Looks like it's going to be down again today. So are we in correction mode? That's going to be the big question on the table. And I can see that the market has now opened about 9 seconds ago. So let's take a look at what things are doing. In the cash markets, the Dow is down 110. The NASDAQ 100 is down 40 points. The NASDAQ Composite is down 34 points. The S&P is down almost 9. The Russell 2000 is down 5. Volatility is up. The VIX is up 4%, which should come as no surprise. In my portfolio, I have Apple, Autodesk. These are all options, by the way. Intel, Kohl's, the emerging markets, Win, and XLRE, which is a real estate ETF, which has actually been doing better lately, although this is puzzling because the index itself is down 12%. Oh, see, there they corrected. So that index is down, at least the options I'm in are down $25. It's basically the thing's basically worthless. Real estate's not been good to me. I thought about maybe selling calls against it. We'll take a look at that a little bit later today. Now, Wynn Resorts, everybody knows what's going on with Wynn. I mean, these allegations have come out against Steve Wynn, and the stock has been on a roller coaster ride ever since then. Let's take a look at that. Right after the news came out, Wynn just tumbled. Give this a second to refresh here. Here we go. I don't know why that took so long. So when the news came out on the 26th, you can see just this horrific decline. Okay. Now, it stopped right about here. Okay, which consequently is about a level of support if you take a look at recent history. Okay. Now we're looking at a daily chart here. In January, so when the very first trading day of the year was a down day, it was actually a gap down, and it traded down and it touched this 160 and change level basically a couple of times before going on a pretty meteoric rise. Or maybe I shouldn't say meteoric rise, meteoric fall, but this just astronomical rise. Okay, now it's on this meteoric fall. But what's interesting is the fact that as viciously and dramatically as this has occurred, it stopped at this previous level of support, at this 160. You can see that right here, okay? The day the news came out, right, it was a horrible, just a sickening decline. It gapped down again the next day, right, and ended down for the day. The next day, and probably what happened was it traded down to this 160 level and then recovered. It was in recovery mode. So if we take a look at, and what day was that? That was the 31st, or 30th rather. So if we take a look at an intraday chart, on the 31st, which was Wednesday, that's exactly what it did. It traded down to here and stopped. And it did this before. Now, we're not seeing, this is the extended market, okay? So the daily chart was not drawn to show you, it was only drawn to show you regular trading hours. It did trade actually down below, in the extended market, down below this 160 and change level, okay? But the point is, effectively, this level, it bounced off of it, and it's been on recovery from here until you get to here, and then it's been down. A lot of this is news driven. This part here was more just probably sentiment turning around because it had bounced off of that level. But then here, this is more the function of news coming out. So what news has come out about Wynn? Well, the Nevada Gaming Commission is launching an investigation. The board is in kind of damage control mode right now. There is a good chance that if the Nevada Gaming Commission decides to review basically Mr. Wynn being at the helm, what is that going to mean for the stock? Kramer came out a couple days ago and said, Wynn Resorts without Steve Wynn is just another hotel chain. So whatever value was built into this rise that we just saw, you can expect that to evaporate if Steve Wynn is no longer at the helm. So we'll see what happens there. Having said that, Wynn is up a little over 2% today. So that's good for me anyway. We can see that the position that I have in Wynn is up. Emerging markets are down. Now the reason for that, and I'm going to have to do something here because I need to take a look at what I think emerging markets are going to do in the short term. This has been a good position for me. I was in VWO before emerging markets had even taken a turn around. And just before they did take that turn, I actually put on some, I was long this ETF. I had actually put on some calls, which are the 2 calls that I have today. Actually, it was 3 calls. And they've been good to me. They're up quite a bit. I don't want to give that back. So I'm probably going to look at either getting out of this completely or maybe selling some calls against it. You know, maybe not all the way out to January of 2019, but maybe I'll do a rolling strategy where I'm selling calls and buying them back if the emerging markets continue to go down. Now, what's causing them to go down? Well, one thing, the strong dollar. Analysts have been basically saying that they think emerging markets for 2018 are going to be strong. On the other hand, there are some other voices that you're hearing, that I'm hearing, that are saying, yes, emerging markets, but be selective about the emerging markets that you're in. So VWO is just a broad index, you know. Which players are going to be up, which players are going to be down, right? You know, where does China fit into that? Where does Brazil fit into that? Where does Turkey fit into that? So kind of the mantra that I'm hearing is emerging markets, yes, but be selective about the emerging markets that you are focused on. Emerging markets as an asset class, realistically, are being hurt by strong dollar. Which, let's take a look at, you know, what is the dollar doing? In Davos last week, there was some confusion, and it sent the dollar on kind of a roller coaster ride. So we'll take a look at the dollar index. Once it loads here, let's get rid of these drawings so that we can just look at the chart itself. Everyone's talking about strong dollar, and the fact that the Fed is on this tightening kick, you'd think might be bullish for the dollar, but the reality is we're not really seeing any extraordinary tightening. The Fed, another way to put it is the Fed is very, very dovish with Janet Yellen at the helm, and it's basically looking like Jerome Powell at the helm is going to continue that same stance. The Fed is not extraordinarily hawkish. And at some point I might have to pause the stream and fix these delays in these charts loading, because this is just really going to slow us down if we're just waiting for data. So my day is taking a turn. I'm still down, but I'm not down by as much as I was before. Um, Autodesk is looking good. Kohl's is looking good. Wynn's looking good. Emerging markets are not. Apple's not looking good. We'll talk about this Apple position in a second because Apple reports earnings this afternoon after the market closes. My opinion on Apple, and I don't like to play earnings unless I have a real strong opinion one way or the other about what I think the result is going to be. Earnings in my mind are a coin flip. Unless you're an analyst and you're really like, or if you just eat, live, and breathe the stock, I don't think that you can know for sure what's going to happen with earnings. You know, the only way to know is to have inside information. Trading on inside information is illegal. So effectively, my opinion, playing earnings is a coin flip. And one of the things that you'll learn by watching me, my opinion is that you need an edge, a statistical edge. In my mind, trading is no different than playing poker. And if you play poker extensively, you'll know that it's all about odds. What hand has a better has the better odds of winning? You know, based on what you see in the hole cards, if you're playing Hold'em and you see what's on the board, you know, if you're good at it, if you can do math in your head intuitively, and if you see what's on the board, you have a pretty good idea of what your chances are of winning. And you calculate, okay, what's in the pot? You know, what do I need to bet to stay in this hand? You know, am I going to get a return on that investment? You know, if the pot is $100 and I need to put 20 to stay in, that's basically 5 to 1 on my money or 6 to 1 on my money. Is that a good bet? Is that a bad bet? Trading earnings are the same way. So if you take the approach that, you know, trading earnings is a coin flip, then you need to be doing a lot better than just 1 to 1 on your money. If it's risk 100 to make 100, that's not a good bet in my mind, because even if it is a coin flip and you win half the time and you lose half the time, you might say, well, that's breaking even. Well, that's assuming that you play earnings continuously, consistently. And if you do, even if you do that, and if you realize a break-even result, you got to figure those transaction costs in there. So really, what you're doing is you're losing. So if you're not doing at least 2 to 1, if you can't expect to make 2 to 1 risk, you know, reward to risk. So in other words, risk 100 to make 50. That's not a good calculus. Okay. I like to see 3 to 1, 4 to 1. I did a trade on NVIDIA, and I'll show you the structure here a little bit later in the morning, where I was making 5 to 1. And I realized 5 to 1 before I closed the position out after NVIDIA announced earnings. And it's been on a tear ever since. New viewer acquisition just blew everybody completely away. Let's see if that dollar chart's loaded. Oh yes, it's finally loaded. Okay, so for 2016, you know, President Trump got elected here in November, and it was bullish for stocks, it was bullish for the dollar, and then ever since, the dollar has just been on the decline. Some of that may have to do with the notion that Trump is not going to be as effective a president as people thought that he was going to be. A lot of his major initiatives have just been, you know, held up. Although this began at the beginning of 2016. And he wasn't even inaugurated till the end of January. So we can see here, like right after inauguration, the dollar kind of recovered a little bit, but then it's been on a decline ever since. And I would say, yeah, it was probably right around like March when the cracks started to appear. If memory serves, I think it was March when Trump was really on, okay, we're going to reform healthcare, and it failed miserably. And the dollar's been on decline ever since. Now, last week in Davos didn't help matters, okay? When Steve Mnuchin came out and said that he would be okay with a weak dollar, I think that was here this last week. Well, you can see what the dollar did. Now, yeah, Trump came in and said, no, We want a strong dollar, and that caused the dollar to recover a little bit, but in the final analysis, I don't think people believe that. I think sentiment is still negative on the dollar. What is the United States broadcasting? What are they saying versus what are they really doing? I think the overall perception is that the U.S. isn't going to take any extraordinary measures to prop up the dollar. Plus you've got the Fed setting policy, and as I mentioned earlier, the Fed really isn't doing anything to prop up the dollar. I mean, they're not on any kind of extraordinary tightening run. So the overall view of the dollar is just a negative one. Look at this. Wind's doing well today. Emerging markets, again, not doing so hot. KSS, coals, this has been a good one for me. What I still have on here is only half of my original position. I had a position that I got rid of about 2 weeks ago that did quite well for me. But coals has been on a tear. And the reason for that, let's talk about the Amazon effect. Amazon has just been eating everybody's lunch. And late in the year, I think it was in December, we were hearing, oh, retail's dead, brick and mortar, everything's going to be, Amazon's going to take over the planet. Well, first of all, the EU and the US are not going to allow, the EU in particular, they've been very anti-monopoly, is not going to allow that to happen. Now, I don't know how big of a presence Amazon has in Europe, but I know that domestically, they're very strong. So if you take a look at the retail space, retail is all about who can compete with Amazon. And I don't think competing with Amazon necessarily means that we're going to move completely away from bricks and mortar and go online. If you've heard the expression bricks and clicks, that's what it's all about. Who are the retailers that can basically adapt to Amazon's online model? All right. Amazon is not completely online either. Look at the Whole Foods acquisition. And Amazon has spearheaded this idea of the store of the future, which they're actually test marketing right now in Seattle, where you go in, you get your purchases, and you walk out and you're charged for it. Whether it's facial recognition software, or if it's something that's on your phone or whatever, RFID tags on the merchandise that you select. Don't know specifically what the technology is behind it, but we know that the technology is there to enable this. So basically, if you look at the retail space, who can compete effectively with Amazon? All right, Kohl's is one of them. As we can see, once this chart loads, and I may take a small break here at the top of the hour just to try to fix this situation with these charts loading really slow. What I was saying was, if you take a look at the retail space, you got to pick the strong players, and the strong players are going to be those who can compete with Amazon. Kohl's is one of them. I think Kroger's one of them. Walmart's one of them. It didn't used to be, sentiment used to not be that Walmart could stand up, but they have been integrating. They've been really beefing up their online presence. And as both an Amazon shopper and as a Walmart shopper, I don't think Walmart is there yet, but they can get there. I do like the fact that Walmart has something that Amazon hasn't had, which is if it isn't in stock, okay, they can ship it to the store and you go pick it up at the store. And if it's in stock at the store, you can just go right away. They'll pick it, they'll hold it for you. Okay. Amazon hasn't had that until recently, until they came up with this idea of like Amazon Locker, where you can go to some location to pick up your product. However, if it's not in stock in your geography, you're still going to have to wait. So that's the challenge for Amazon. So as you take a look at it, you know, Amazon is coming here away from the exclusively online presence to more of a bricks and clicks hybrid, and the traditional bricks and mortar retailers are moving themselves towards it, towards the middle. Walmart's doing that. Kohl's is doing that. Kroger's doing that. Kroger announced a few days ago that they were looking at, or they didn't announce it, I think it was just rumors, that they were going to partner up with Alibaba. Well, Alibaba is kind of the Chinese competition to Amazon. So how interesting would that be? I mean, Kroger's a U.S. company. That, if that were true, that basically gives Alibaba a foothold in the U.S. and can really give Amazon a run for their money. Now, that news didn't harm Amazon. I mean, Amazon's been on a tear. But if you take a look here, you know, what Kohl's has been doing since the beginning of the year, it's really been on a tear. And it came to this level right here. So if I draw a support line, basically hit support at this 64, and it did that actually just today. You know, it's been moving towards that point since it peaked on the 23rd of January. It's been kind of down. It's been moving down. You know, yesterday was a down day for Kohl's. Today looks like it's a bounce day, and it's coming right to this level right here, where it was, depending on when you look at it, either resistance, it was resistance here, or support, although this bar didn't touch it. You know, prior resistance is future support. That's what we're seeing here. We see that even though these candles traded above this level, they closed below that level. So that was a resistance point for you. And then it broke through on the 17th and it closed above it. And it's been up since. And then it peaked at the 69 and change, and it's been coming down, and it hit this level of support, and now it's bouncing. And Kohl's is doing very well today. Let's hope that, you know, for me anyway, let's hope it stays that way. So now we can see in my portfolio, now we're only down, you know, cost of a meal for the family at McDonald's, basically. So I'm interested to see what Apple does at the close, after the close, when they announce earnings. My belief on Apple is what comes out this afternoon is going to be positive for the stock in the after hours and tomorrow. And here's the reason why I say that. There's been a lot of pessimism lately about the iPhone X, iPhone 10, okay? And that has been a drag on the stock in recent days. We have witnessed in Apple a turnaround from a couple days ago, or from a few days ago rather. And I believe that sentiment is that the fears about the iPhone 10 are overdone. And a lot of those fears with regards to the iPhone 10 production cuts is already kind of baked into the stock price. In fact, it was almost too much. It was too much of a correction. And so now it's on a rebound. You know, at the end of the day, it doesn't matter necessarily what one product is doing. What's the overall earnings for the prior quarter, and what does the future look like? Now, if Apple guides down, that's going to be negative for the stock. If they reaffirm guidance, that will be a good thing. If they can basically come out and say, Yeah, there were production cuts, but it hasn't been that bad. Like, it's not as bad as what the headlines are saying. You know, the whole Trump thing, fake news, it's fake news, it's not that bad, whatever the case may be. However they play it on the earnings call is going to be critical, you know. But we can take a look at what it's doing today. It's up 30 bips. You know, it peaked at 180 and change, and it's been on this decline ever since. And then it hit a bottom here at 164 and change. And it's been on a recovery since. Now, if we take a look at this best fit trend line, it's at an interesting point today because this best fit trend line, if you look at it right here, okay, it fell below the trend line, but it's looking like it's going to come back up. And it's done that a couple times before, if you believe that this is the best fit trend line. Drawing trend lines is not an exact science. If I were to draw it this way, where it touches every, you know, it never violates the trend line, then that would say that, like, if this tool to work, it'd be great. All right, let's just snap it. If you believe that this is the trend line, then what that would tell you is that Apple still has room to fall, okay? But that's being a little bit too rules-bound or legalistic. It's being too scientific about how you draw this trend line. Sometimes you have to draw a trend line that's a best fit trend line where it shows. You have to be a little intuitive about what these levels of support are. And I believe that this was a level of support here. I believe that this was a level of support here. I believe that this is shaping up to be a level of support. Okay, now remember the adage that past support is future resistance. Well, that's what we don't know here. Is this acting as support or is this acting as resistance? Well, the remainder of the day will tell. Now, I certainly hope I'm right, but if I'm wrong, it won't be a huge loss. And I'm going to get into that in a minute. It's the top of the hour now. I'm going to take a break, try to fix this slowness in the charts loading. I'll be back probably in about 10 or 15 minutes. I'm going to leave the stream going. Or actually, you know what? I'm going to turn the stream off so that you don't have to see the sausage being made. So I'll be back right around 8:15, which is 10:15 on the East Coast. Thanks, everybody, and I'll see you in a little bit.